The next 30 minutes are all about your stock-related queries. So write to us on any of our social media channels or on the WhatsApp number that will be on your screen in just a minute. You can also write to us on the YouTube live chat and we'll take your queries from there. So even if it's a short-term query or a long-term strategic investment question, do write to us and we'll get them answered by our guests on the show today. But before we do that, let's take a quick check of where the markets are currently at. You look at the benchmark indices doing fairly well today. Nifty 50 up about 0.6%, so not doing too bad there. Let's look at the contributors for the Nifty 50 and see what's pulling the index higher. You see the likes of ICICI Bank, L&T, RIL, all in the green. However, on the other end, there's HDFC Bank, obviously, post its results. We're seeing some downtick there and about 22, 23 points down there. You have NTPC, ITC, Maruti, all in the red. But you look at some specific names like NTPC, that's down about 1.8%. Now, this is the one in the Nifty 50 index that's losing the most. Then there's HDFC Bank, JSW Steel, ITC, Maruti Suzuki. BPCL is the top gainer on the Nifty 50 along with Wipro, that's up about 2.5%. You have Shriram Finance as well, that's also up about 2.5%. So if you look at the breadth of the market on the index front, 44 advances, 6 declines. But let's look at the broader end of the spectrum as well and see how the mid cap and the small cap are doing better than the benchmark for sure. The Nifty mid cap is up about 0.8%, while the Nifty small cap is up over 1% in trade. So seems like the broader end of the spectrum seems more positive than the benchmark itself. But let's also look at the sectors. You have all the sectors in green today, so nothing to complain there. You have the Nifty consumer durables that's up about 1.5%. You also have Pharma, Nifty PSU Bank, Realty Index, all up over 1% in trade. Let's also look at some of the stock-specific action. You're seeing GSPL that's down 20%, so has hit lower circuit, and we'll come back to that on why that is the case. You have HDFC MC down about 0.8%. IRIDA doing well in trade today, up about 7.5% after the business update. You have Persistent System post results down about 8% as well. Ramkrishna Forgings down 2%. Now, Ramkrishna Forgings has been gaining in the last couple of sessions. We saw gains of about 5% in the last 4 or 5 sessions. And this came after they received an order from a US EV company to supply to them. But it seems like presumably it was Tesla, but now that order is on hold and we're seeing that impact in the stock today. We're seeing Voltas on the back of a brokerage note. You have Zomato up about 1.5% because the increase in the price. So they've taken their fees, platform fees from 4 rupees to 5 rupees. So that's the impact. But let's circle back to GSPL, which is the focus for today. The stock is down 20%, stuck on lower circuit. And we have my colleague Mihika joining in to tell us what's happening there. Mihika, take it away.
Yes. So the Petroleum and Natural Gas Regulatory Board has cut the tariff of one of the key Gujarat pipeline networks of Gujarat State Petronet by 47%. Now the authorized tariff is at rupees 18.1 MMBTU versus 34 rupees previously, and this is also much lower than the 51 rupee tariff that GSPL had claimed. Now in terms of impact, while it could lead to lower end user prices for both household consumers as well as industrial consumers, it could put a pressure on Gujarat State Petronet's profits. Now, the reason why the difference between what was asked and what was actually authorized is because the Petroleum Natural Gas Board's assumptions when it comes to volumes, capex and opex is very different. When you talk about the capex, Gujarat State Petronet claimed a capex of 3,400 crores, while the board only allowed 1,800 crores. In terms of volumes, in terms of future volumes, volumes. While the company assumed 26 million metric standard cubic meter per day volumes in the future, the board approved much higher, 22% higher at 31.7 MMS DMD. And then after this tariff hike was announced, all the brokerages did turn negative on the stock. Now we had Nomura, which downgraded the stock to a reduce from a buy previously at a target price of 320, which implies a 15% downside from the previous close. They've cut their FY25 and 26 EBITDA and EPS estimates. EBITDA estimates were cut by 37 and 42% respectively for FY25 and 26. And they did say, however, that the tariff would be renewed next fiscal if the actual volume show considerable variations from the board's assumptions. And then lastly, we had Kotak, which downgraded the stock rating to reduce to at a fair value of 360 rupees, which implies a 22% downside. They believe that a 20 to 30% tariff cut was due, but the actual tariff cut was much above expectations. And they've also cut their FY25 and 26 earnings estimates by 28 and 37% respectively. And they expect the return on capital employed to decline sharply to 11 to 12%.
Thank you so much, Mihika, for that comprehensive explainer on the stock. Now, on that note, let me introduce you to the guests for today. We have Sameer Dalal of Natwarlal & Sons Stockbrokers and Rajesh Palvia of Axis Securities. Welcome to both of you. Thanks for joining us on the show today. Sameer, I'll come to you first on GSPL. We're seeing brokerages coming down hard on the stock. We're seeing the stock stuck on lower circuit. Now the question here is the difference in the expectation, not just the street expectations, but the company versus the board as well. And we're seeing that impact. So from here on, people who are holding onto this stock, what should they do?
So I don't have active coverage, but what I can definitely say is that when there's such a big variation, I did read about this note, so I can talk a little bit about it, is that when you have such a big variation in the expectation and the price, the profitability is going to take a very, very large impact and a hit. So now what you're going to have is the return on equity and return on capitals for this company starting to come down, given the kind of realizations that they have. And given that this current price is not going to be very remunerative for them, you may even see some amount of volume cut, but I mean, it needs to be seen how it pans out. But net, rightfully so, the stock has reacted 20% down. Somebody who's holding on to it obviously can't sell it today. Whenever it opens up from its selling circuit, one needs to review what price it opens at, because at the end of the day, there is still some value to the business, right? What they have, what they hold. So you have to see where it opens up. But prima facie, this is a big negative. And if you are getting an exit at this current price for the time being, I think one can take it, because the upside is going to be capped in the next 6 months to 1 year, given the fact that everyone knows that there's not going to be much profit to be made. So you might find better opportunities. But I mean, if the circuit opens closer to 250, 240, then one needs to review the situation at that point.
All right, fair point. Let's dive into the questions now. And if you haven't written to us, do write to us on the WhatsApp number or any of our social media channels. Let's start off with the first one. This one is from Gatupalli Sanjay from Hyderabad. I hope I'm pronouncing the name correctly. This is on Coal India. And even though this is a long-term query, I'm going to come to you, Rajesh, first on this one. Now, based on the charts, I think the price that they had written to us was slightly lower on Friday. But from a longer-term perspective, do you have any sort of targets based on the charts for Coal India?
Yeah, so overall structure for Coal India is on the bullish side, and if we analyze on the longer term time frame, yes, we do have bullish view on the stock. As if we analyze on the monthly chart, stock is continuously moving in upsloping channel. That clearly shows that there is a sustained buying action is taking place. Though there is some consolidation is taking place since last couple of weeks, but overall structure on the short to medium term is also on the bullish side. Till stock is holding above 410, 405 level, I think one should remain on the long side of trade. Once stock manages to cross above 460 zone, then possible really on the higher side, we can see towards 500, even 540 kind of zone on a longer term perspective. So I think he can hold the position. Even if he wants to add further more position, can add above 460 once that breakouts happen.
All right. Fair point. Next question is from Vaishnavi from Chennai. Now, Sameer, I don't know if you'll have coverage on this counter. It's Gabriel, and the stock is currently priced at 348 rupees. However, they've bought the stock at 196. From a longer term perspective, do you have a view on this?
No, actually, we don't have Gabriel under coverage. I'm really sorry.
All right, let me take it to you, Rajesh. On Gabriel, they've bought the stock at 196, currently trading at 348. What's the view?
So since last couple of months, we have seen some profit taking is happening in this stock. But if we analyze on the longer term perspective, yes, stock is holding the ground on the bullish side. Till stock is managing to hold above 310 level, that's the important level on the longer term chart also. If it holds above 310, then yes, the long term trend is likely to remain on the bullish side. And on the high side, once stock manages to cross above 365, 370 zone, then it will resume its uptrend, and then possible target on the high side we could see towards 420 to 440 also. So overall structure for Gabriel is on the bullish side. He can hold the position.
All right, so hold is the advice from Rajesh on Gabriel. Next up here, this one's from Satya, and there are a couple of pharma names now, Sameer, here, and he wants to know if it's a good time to enter into any of these. These three names are Zydus Life, Divi's, and Gland. What's your pick among these three pharma names to enter?
So if I had to take a pick, I would have picked Divi's in this list. Though Divi's is not my top pick in the pharma space. And the reason I would pick Divi's in this lot is because of the API exports that they're doing. And that continues to see a lot of traction. You know, they did have some problems in the middle with regulatory from the US FDA, where certain criteria were not met, because of which they did have a bit of an impact on their sales and the business. But Divi's is a very strong company which will be able to address a lot of those issues. And, you know, once they are able to start growing their export business again from the API side, I think they will do well. So if you ask me in the pharma space, I mean, since he's given three specific, the person has given three specific names, I'm saying Divi's. But if they want to venture beyond just these three names, the top pick for me in the entire pharma space still continues to remain Sun Pharma. It's again a large cap company where they're working on the differentiation of product like branded generics, which can get traction, which is beginning to see traction, and which is why we've seen the stock price move up. If that traction continues, which we believe will, given the kind of product launches that they have, I think Sun Pharma could be something that outperforms, but Divi's from the three that he mentioned.
Have a price target on Sun Pharma?
So I think if you look at maybe a 2-year horizon, I think you could get a 20% CAGR return over that period of 2 years.
All right. Next counter we're talking about is Tata Elxsi. This one's from, okay, I'll try and say the name, and I hope I say it correctly. It's Naushan Kanjabdullah from Kerala. I hope I've said it correctly. And the counter is Tata Elxsi. They've bought the stock at 7,799, slightly above the current market price. And Rajesh, the stock hasn't done too well in the last couple of months. But do you see upside from here on?
Yeah, so stock is still underperforming. If we analyze the near-term, short-term structure, stock is trading below to their important support area, moving averages, and now stock is trading near to its critical and important support area, which is a multiple support area for the stock around 7,400, 7,370 kind of zone. If at all the stock breaks below 7,370, then possible down move may extend, and we can see further lower level towards even 7,100 also for Tata Elxsi. On the higher side, the major supply zone for the stock is placed at around 7,700. So until the stock not crosses above 7,700 level, it may remain under pressure only for whatever pullbacks we are seeing in the near term will attract supply pressure. Above 7,700, yes, there could be some, up move we can expect towards 8,000, 8,200 kind of zone. But at this moment, I think 7,400 needs to keep as a stop loss. If it breaks below those levels, then possible downside can extend further.
All right, fair point. Stay with us, Sameer and Rajesh. It's time for a quick break, but we'll come back and take more questions. Stay tuned. Welcome back. You're watching Ask Profit on NDTV Profit. Let's start off with the questions again. The first one is from Praveen Kumar from Kerala, and the counter we're talking about is CDSL. They bought the shares at 645 a piece. I'm going to come to you, Sameer, on this. There's a substantial profit, notional profit rather, that they're sitting on. It's currently trading at around 1,969 rupees. It has doubled in the last 1 year itself. But what would your suggestion be in a case like this where there is a considerable profit? Should you take some profits off the table or stay invested in a stock like CDSL where the future seems positive?
So definitely the future is very positive, and it's a great company, strong balance sheet, no requirement of additional capital per se. The growth has been exceptional over the last couple of years, given the fact that new demat accounts have opened, which is at the end of the day what generates revenue for a CDSL. But what has also happened simultaneously, what you rightfully said, is the stock has run up quite a bit. And because the stock has run up so much, I think the valuations have probably moved above where our comfort zone remains. So as much as I say that I like this stock from a long-term point of view, maybe for the next 5 years, because I still think there's a great opportunity for demat accounts to be open. I mean, once you have someone like Geo Financial getting into the broking business, a lot of people are going to, I don't know whether they use NSDL or CDSL, but I mean, let's assume, what I'm trying to say is the reach of the broking industry is going to keep increasing, which means more demat accounts opening. But for the near term, I think a lot of the valuation from the upside has been captured. So maybe one can look to book some profit in the near term. But yes, if the stock comes closer to the 1,500 levels, I would definitely look to buy the stock back. Question is only, I don't know whether it will come down to those levels. But at this point, I mean, I'm not comfortable holding it given the valuations. I think, again, there are companies which cater to the same equity market kind of scenario, which can probably generate better returns.
All right, fair point. The next counter we're talking about is HDFC Bank. It's a little weak today in trade, but this is from a shorter term perspective, from a 3-month perspective, Rajesh. This one's from Sujay from Kolkata. Now, we've seen Q4 results, deposit and NIMS growth seems positive, but on the technicals, how does it look from a 3-month perspective?
So, if it's for short term, yes, stock is showing, buying interest on the downside. 1,500, 1,480 is the important support area for near term to short term perspective. If we analyze on the weekly time frame, stock is moving in upsloping channel, though there is a major supply zone is placed at around 1540, 1550 zone. That is the major hurdle for the stock on the higher side. But the stock manages to cross above 1550 zone, then possible short covering may trigger in this counter, and then upside target we could see towards 1600 to 1620 also. So as he has invested for short-term perspective, I think he can remain invested. Keep your stop loss now at around 1480 to hold your long position.
All right. Next counter we're talking about is Amber, and this one's from Rahul from Delhi. They bought the stock at 2000 levels. The stock is currently trading above 3600 levels. Sameer, somebody here as well, a decent amount of profit that you're sitting on. You see the stock almost doubled in the last 1 year itself. What kind of upside do you see from a longer term perspective?
So from a long-term perspective, again, very, very bullish. It's a similar story to CDSL. I still believe, not that the business model is the same. What I'm saying is the upside over a long term is the same. Given the fact that the penetration of electronic goods within the country is only going to keep increasing, replacement demand growing, Amber Enterprises being one of the early movers, them, Dixon Technologies, both are going to be beneficiaries of the growth in consumption, especially the discretionary consumption that happens over the next 5 to 7 years. Again, the same problem is where I face is, again, the valuations have probably moved way beyond, and I mean way beyond our comfort zone. So to justify this valuation, I need the profits to be at least 1.8 to 1.9 times of where it is. There I would find some. So maybe, 1 year, 1.5 years down the line, if the growth numbers pan out the way I think the street is expecting, and we get no hiccups along the way, and the stock is at a similar price, it may be something that I look at. But at this point of time, I'm not looking to invest in it. If the person has some decent profit, once again, take a little bit of profit. You can hold on to some amount of it and take some profit off the table. look for other opportunities. And maybe, 1 year down the line, if we see the stock has either corrected by 20-25% or the earnings have grown by 20-25-30%, then one can maybe look at even re-entering even at the same price, but 1 year later, because that money can be used to generate another 15-16% return over that 1 year period.
All right, fair point. Next question is from Rashida. This one is on Anup Engineering. The question is, should this stock be bought after its ex-bonus date of 23rd April? Let's first take a look at how the charts look in this particular stock. So Rajesh, Anup Engineering, how does it look? Right time to buy into the stock?
So very strong structure across all time frame. The way stock is holding the ground at higher level, whatever minor dips which we are getting in this stock is attracted by the buyer's interest. So I think those who are already holding the position can hold, and we could see another round of rally in this stock, and possible upside target we could see towards 3,700, even 3,800. The way stock is moving up across all time frame, we believe that whatever minor dip if you are getting in this stock should be used as a buying opportunity on the downside. 3,300, 3,350 are the important level for near-term to short-term perspective. If you get opportunity to buy this stock around those levels, should be used as an opportunity. On the higher side, 3,700, 3,800 could be the possible target going forward in this stock.
All right. Next counter is a Persistent System. Now this is losing in trade today. It's down over 8%. This one's from Ramanandan from Hyderabad. Samir, we saw the results, decent revenues, decent profits, some bit of pressure in margins, but lower TCVs. Does this give you a picture of the mid-cap IT space? And specifically on this counter, would you say that this is a buying opportunity at this juncture?
No, I don't think Persistent is a buying opportunity at this moment. So, for some time now, we've been saying that the IT stocks have probably got another year and a half of period where growth is going to be low. Now, to say that we want to value these companies at 20 plus 25, 30 times earnings is something that's unjustifiable when you're talking of revenue growth of anywhere between 1 to 7, 8% for most of the companies. Persistent has, of course, done better. It's much better than the rest of the industry. Hence, the stock has actually seen such a strong run-up over the last year. But again, what you rightfully said, in the question was that the total contract value that they have won for the current quarter has come down, which indicates that there is a bit of a slowdown, and that slowdown is going to persist for another 6 months to a year till things start seeing an uptake and till there is some more clarity on what is happening in the geopolitical situation globally. So given those facts, I think giving premium valuations to the IT sector is not justifiable. Even though these are very good companies which are spitting out great amounts of cash, you see them doing buybacks, giving it back in the form of dividends, I still believe that valuations is something that you have to look at, and not only valuation, but also growth. Why should you get that valuation when your growth is as tepid as it is? People talk about because of AI that their cost of operations will come down because a lot of the automation will take care of some of the requirements of staffing, which will lead to operational efficiencies. But we really need to see that playing out. And I don't think we're going to see any of that really playing out for the next 6 months to a year. So I think over the next 6 months to a year, whenever we see things happening, maybe IT is something that we will look at to buy. Persistent valuations have moved up again quite a bit. It's not a buy according to me in this moment.
All right, fair point. Now, unfortunately, we're completely out of time on this edition of Ask Profit. Thank you so much, Samir and Rajesh, for joining and for answering so many questions for us. And viewers, if you were not able to take your questions today, we'll try and take them tomorrow. But I hope that the questions that we did take, the counters that we did speak about, will be of help to you. But that's all that we have on this edition. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. We are in many ways, we actually are the generation which is going to build the country. Our parents spent their whole life building roti kapda makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June. So I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Benchmarks continue to extend gains. The Sensex trades above 73,500 while the Nifty crosses 22,300. A sea of green across sectors. PSU, bank, realty and consumer durables emerge as the top gainers for the day. And GSPL hits lower circuit as the Petroleum and Gas Regulatory Board cuts key Gujarat pipeline tariffs by 47%. That is 64% below the company's expectations. More earnings on the radar. You have Reliance Industries and Mahindra Logistics, both expected to come out with their March quarter numbers today. And Hong Kong's food regulatory body recalls 3 MDH and 1 Everest spice mix after detecting cancer-causing ingredients. Good Good morning and welcome. I'm Harsh Saita. You're watching Hot Money on NDTV Profit. Quick check on where markets are at. You're seeing the Nifty trade very close to the day's high, above the 22,300 mark as we speak. Of course, the day's high came in around the 22,340 mark. So very close to the day's high after inching lower, at least in the first hour or so of trade. Let me quickly take it to some constituents which are doing quite well in trade. You're looking at the likes of an ICICI Bank knocking off the loss which is seen on HDFC Bank, at least on the Nifty contributories today. So you're seeing 20 points contributed by ICICI Bank, up roughly 1.4% in trade. The other one gaining well is Axis Bank as well as Larsen & Toubro. Those are the other two which are gaining fairly well in trade. Within the Nifty 50 pack, you have also some traction which is seen in BPCL, Eicher Motors, both of which are up 3% plus in trade. And you also have the likes of a Tata Consumer and SBI Life. But the breadth of the market is extremely strong. If we can have the advance decline, you have 45 advances on the Nifty 50 itself, and the advanced decline in front of you clearly showing that the breadth of the market is extremely strong, because the broader markets too are doing fairly well, in fact outperforming the Nifty 50 in trade today. So you're seeing good traction in broader markets. The Nifty mid cap up around 0.9% in trade, and the Nifty small cap too up over 1%, 1.2% in fact in trade today. So good traction across the larger caps as well as the mid and the small caps. Within sectors, first let's focus in on the Nifty Bank, up around 0.2%, but outside of that, good traction seen in the Nifty Pharma and Nifty PSU Bank, both of which are the lead gainers along with the Nifty Realty Index. So Nifty PSU Bank up around 1.8, Realty up around 1.4, and Pharma up around 1.3. So those are the top gainers for you. No losers, you're only seeing a carpet of green. Of course, Nifty Consumer Durables is up 2+%. So that's the other one which is in focus. But quickly moving on, we'll shift to the 5 stocks that we focus in on every day on Hot Money. And let me first try and highlight some of those stocks. You have GSPL, no surprise there, going to be a knock definitely over the next 1 year with regard to tariffs. Spark, plenty of news happening. We'll try and break that down a little bit more, because one of their drugs has been taken off and that may impact, and it's impacting the stock price. HDFC Bank on the back of numbers. IT stocks, Wipro and Persistent, a tale of two, both stocks have moved in different directions in trade today. You have Hindustan Zinc and Voltas among the other buzzers. So these are some of the stocks that we'll focus in on, and I have with me today Ashish Maheshwari, who's the director at Arihant Capital Markets, and we're going to try and break some of these stocks down. Now, welcome to the show, Ashish.
Thank you very much.
Right. First up, Spark. It's hit lower circuit. Company has halted its Parkinson's drug trial. Varsha joins us with the details. Varsha, what's the kind of impact that this will have on the numbers going forward?
Well, thanks Harsh on that. So yes, Sun Pharma Advanced Research have locked in another 5% lower circuit today. Now with today's move, the stock is down 19% in last 5 trading session. Now this is on the back of company halting their Parkinson's drug trial. Company has seeded phase 2 study on vodobatinib, which is again a drug for Parkinson's. Now company had completed review of 442 patients who finished part 1 of the study by March 2024. And the primary goal of the study was to show an improvement in the systems, but the study showed no evidence of treatment benefits in patients who received this drug. As a result, the company decided to close the study. Now, if you see the estimated peak sales of this drug for Parkinson's disease is around $5 billion. Now, company did a con call wherein they said that it will look to out-license this drug, and there have been consistent interest from larger pharmaceutical companies as of today. So let's see what happens, what pans out for this company. So this is all we got on Spark as of now.
Okay, thank you for that, Varsha. Ashish, let me switch over to you. Spark, the stock itself has nearly doubled before cooling off, 20% down over the last few sessions, as Varsha highlighted. What's the sense at this point especially with regard to fundamentals, how would you look at this development which has come through?
So these research companies which are very focused towards pharma research or research of new drugs or new molecules, if you are investing in such companies, a high risk, high return game. So when we have seen the stock from 180 move to almost 470, and as soon as the negative news came, we are witnessing